London AIM and Canadian venture exchange-listed Arrow Exploration has been on a rip recently, rising more than 40% in the last 3 weeks or so. Its latest well results confirm strong momentum in Colombia. Marshall Abbott is chief executive. He joins us now. In fact, it's been a really good couple of years. I think you're one of only a small handful of companies that have done so well on AIM. AIM, it's been a dreadful time recently, but I have to say, looking at the share price, which we'll do in just a minute, it has been quite a good ride for investors. But I want to begin, first of all, with the news 3 weeks ago, which has really been the latest driving force. Update us on where you are at Arrow.
So, first of all, the AIM exchange has been very good to us. We've enjoyed our time on the AIM, absolutely. We did an IPO for $15 million. And with oil prices and the $15 million, we're cash flowing about $2.5 million a month on the Tapir block in the Llanos Basin in Colombia, which is the heartland of oil production in Colombia. And so we have designs on getting to 10,000 barrels a day in 3 years with the assets we have in place on the Tapir block. And the results that we currently reported on have been mainly on drilling an area we call Carrizales Norte. We had a rather significant and material discovery there, potentially upwards of 40 million barrels in place. And we've got 15 wells that we plan to drill by year end. And we've got a $45 million budget approved by the board to succeed on that particular program.
So that's going to be enough to get you to where you need to be by the end of the year. You don't have to raise any more money?
No more money. In fact, by the end of the year, we should still have 13 to 14 million of cash in the bank.
Yeah. Explain more about some of what you're doing at the moment on the ground and where the money's going to go. Where are the risks likely to surface when you between now and where you need to be?
So from an operational risk perspective, last year we drilled 11 wells without any glitches. The cost of each well came down probably by 10% each. So we've got that figured out. Above ground risk is minimal in the Llanos Basin in Colombia. But we have established a resource base that has very high hydrocarbon density, a thick reservoir, oil filled. We're going to start drilling it horizontally. Horizontal wells provide significant advantage over vertical wells in productivity. So we can probably produce these wells at 2,000 barrels a day. They'll pay out in 2 to 3 months. So the economics are fabulous.
Yeah. More about the environment where you are and the potential for further expansion. Do you see yourself being a far bigger exploration company in the longer term? I mean, you've got this target of getting to production in 3 years, but are you still continuing to go and drill?
Absolutely. So we shot a 100 square mile 3D seismic survey last year, and that is the key to success in the Llanos Basin in Colombia. It's been undershot seismically. So we have a significant amount of prospect potential that we look at. In fact, we developed our own matrix of where we want to allocate and deploy our money based on the results we expect. Most of the wells we're drilling this year are low risk development and infill wells. And on average, we're budgeting about 320 barrels a day, except for these horizontal wells, we're budgeting 1,000 barrels a day net. And our netbacks at $80 Brent are about $55, so it's a very rich environment.
They say quality comes to the top. Let's take a look at the share price chart, because we talked about this last couple of years or so. This goes back on my chart back here to the back end of 2021, actually. You were talking about the last couple of years have been very good. I mean, this latest uplift has really been all about that reassessment of the well in Colombia, isn't it?
Correct.
This latest move up. In fact, we've got it peaking over where we were back in May last year. At 25.6 pence, this is the London listed share, it has to be said. I think you got something like 90 million US dollar market cap, 120 million Canadian. Are you happy with where the share price is? Oh, that's a stupid question for a chief executive. No one's ever happy. And of course, you don't have any control over the share price. But in terms of what this is pricing in, is it pricing in what you believe to be the potential?
Well, a little bit. When we look at forward-looking cash flow multiple, we're trading at far less than 2 times cash flow, which in the context of my career is probably one of the lowest valuations I've ever had with the most success I've ever had. So we think this is a very convenient entry point for individuals who are looking for a value play, and we certainly consider ourselves to be a value play.
And the backdrop to this, where do you see oil and gas prices going? I mean, do you have a view? What's your best advice? Where's your best advice coming from? What's their view on the oil market?
Well, if you pay attention to the IEA or the API or even the Saudis, nobody's spending any money on exploration. And they're predicting 1.5 million barrel a day growth. We produce 103 million barrels a day as a global producer. An extra 1.5 million barrels a day of consumption is going to stress the oil price. We think there's upside in the oil price. I don't think anybody likes to see it going north of $100 because that impacts the economy adversely. But within the band, within the goalposts of $70 to $90, we're very comfortable.
Yeah. Just talk to us a little bit about other assets. I know these are relatively minor compared to your flagship at the Tapir in Colombia, but you do have other interests, don't you?
Yes, we do. Probably the top of which is a block that we own in the Middle Magdalena Valley in Colombia. It's another depositional basin that is hydrocarbon dense. We do about 200 barrels a day there now. We're applying for an extension to the block we have that could take us to 4,000 barrels a day there, which is not inclusive in the 10,000 barrel a day number I think we can attain just on the Tapir block.
So nothing of that priced into the current share price?
No. The day we get that extension approved, we'll see another bump in the share price.
Okay. Let's wrap it up and work out what investors should now be looking for. Those that are dancing around the stock looking for an opportunity to enter, as you say, potentially at a good price, depending on what happens. What can you say about what you're going to be doing this year that's going to give headlines, that's going to ensure you're either one, on target, or two, that you are doing more than investors expect?
The economics on drilling these horizontal wells it's a whole new level. It's going to take our production to a whole new level. So typically we're going to drill these wells for about $2.5 million net, $5 million gross. And as I said, they'll pay out inside of 3 months. So that's the next news item for us. We've finished building the pad to host the drilling rig. That drilling rig will be there in 30 days, and it'll take us 21 days to drill and get the well on stream. And we'll be compelled at that point in time to report results for sure, as most of our educated shareholders are waiting for that announcement. So we have room for upwards of 10 horizontals just in the little portion of the block that we currently control. And there are multiple other anomalies that provide scope and repeatability of the same kind of play throughout the Tapir block. So we're excited.
Yeah, as indeed you should be. Look, thanks so much indeed for dropping by.
I appreciate the time. Good to see you.
Catch up with you again, Marshall. It's a pleasure indeed for us here at IG. That's Marshall Abbott. He's Chief Executive of Arrow Exploration.